Good turnaround Tuesday, everybody. Hello, Pamela. Welcome to F.A.C.E. Hi, Alexander. How are you, my training warrior brother? Everyone doing okay? Someone's mic is on here. Okay.
That might be me. Morning, Dale.
Hey, Brian. How are you, buddy?
Yeah, all good, mate. You?
Pretty good. Kind of a quiet session. Can you see my charts now?
Yep, got them all there.
All right. So thinking that this Canadian bounce was, again, pretty weak compared to what the dollar's trying to do, make a new high. Wonder what your thoughts were on Canada, plus crude held support again.
Yeah.
I know that correlation isn't, 80% like it used to be, but it's not an advantage for the Canadian.
Yeah, so, it is. I think we're still at the mercy of the yen at the moment, CAD yen as well. So that's probably what's behind this move. We've got a half decent option up there at 126.50, and we've largely seen it pegged up around there. That's expiring today, so that could be a reason why we couldn't push any higher. We've got a bit of just gyration as you lot come to town, you Yanks, and everyone else. It is a bit looking like a bit of treading water at the moment. We've got the CPI coming up, Bank of Canada. I think RBNZ's even this week as well, and obviously the ECB. So one of those weeks.
It's a waiting game in the currencies, it feels like to me, right?
It is, yeah, it is.
S&Ps have been getting a lot of attention, and I talked about the 200-day, and it sliced through it yesterday. But it's interesting, we're getting a little candle here at the, prior 38%. That's, the measurement from here to here. And we are pretty overdone, and there is a lot of fear that maybe we get a Tuesday reversal here. For me to really get constructive, you're going to need to get back above, 44.70 and really 5.5. So, also NASDAQ, could this end up being a right shoulder? Everyone's bearish, or are we just going to wash? And if SMH, which is, an important part, I know we're ForexAnalytix, but Pam and new guests, we cover everything here. Anything that moves, we have different types of strategies to take advantage of it. But the semiconductors look like they're headed for a new low. Now, I don't think you get a real good turn in NASDAQ unless they could turn these. So, I wouldn't be able to buy it here yet. I think we should take out that low. Wondering what you're thinking here with risk, and Aussie has a little strength today.
It's feeling a bit risky offy in stocks, isn't it?
Quite a bit.
We're seeing more down days than we are up days now, and that's the problem. I think the market is looking a bit further out over, to what rate hikes is going to mean for the economy, and it's in the balance. Are the Fed going to hike irrespective of what damage it does to the economy, or do the Fed not think it's going to damage the economy? And as you know, markets tend to take a more cautious approach to things like that. And it's one of the things I keep coming back to on the ECB. If they do turn more hawkish, is any positivity in the euro going to last because of the fundamental picture, which is still looking poor? Still got to sort out what they're doing with energy. And we know that Europe's going to be at risk from high interest rates crimping the economy. Germany's in the thick of it. So I'm really, we have the possible situation where the ECB turn hawkish or more hawkish. We get a pop up to something like, the high 109s, maybe 110. And then a few days later, we see it break 108.
Okay.
I can see something like that happening. But,
interesting narrative. We get some news out of the ECB that the market will construe as being constructive, but it's just a flash in the pan, and we wash out.
Yeah.
Interesting. I saw a chart I watch CNBC a bit, and Carter Worth is a pretty good technician, and he showed a yield chart, and I think it was a logarithmic chart, and he had this trend line going back like now 20 years or so, and it came in right around 283. Notice we're getting a little reversal. I'm not saying it's going to be the end of yields, but it's pretty stretched up here. So maybe ECB tightens and yields come off here in the U.S. We've kind of led the way, don't you think? So I'm just saying I wouldn't be, for example, bonds. And I don't have the bond futures up, but I use TLT. DSI was 5. So, I don't
So
think
you're telling us it can still go lower.
Yeah, the DSI, I'm short the DSI looking for 2. Okay, but it's pretty extreme. And we had Greg on yesterday, so don't, I know I'm a host, but Greg is the Wizard of Waves, and he's saying that we could be close to something here too for at least a bear market rally. So
it's coming away, isn't it?
Yeah. So if that happens, wouldn't you expect some type of pullback in U.S. dollar yen up here? Looks like drive 2 up here.
Yeah, potentially, but it hasn't. Even with the bond moves, it hasn't dipped far. It's never dipped far.
Well, the bond moves have pushed it up, I think, right? Higher yields, higher U.S. dollar yen. We haven't seen a pullback in yields yet.
I think it's 50-50.
Okay.
It's the US yields on that side, but it's also the Japanese side.
Okay.
They're softly jawboning the currency, but when you've got the main man still coming out and saying that yen weakness isn't bad for Japan, it's a green light.
Yeah,
it's a green light for further gains. You've got yields rising, and the bank saying they're going to keep easing. Bank of Japan saying they're going to keep easing. That's 2 big factors for yen pairs to keep rising.
Yeah, kind of. It's almost suicidal from a country that imports everything. Everything is going to keep costing more with.
That's spot on.
Huh?
Spot on. It feels suicidal.
Yeah. Huh. Well, there's a tradition there. So we'll see. Anyway, Stel, gold, silver. I know Blake talked about this, this breakout line that we had yesterday. Yep. I think that's going to be important to see if it holds it on some, maybe right here, there's some confluence for you at 463.
Yeah, I actually got long. I wrote on the chat room, got long a little bit at 24.83 yesterday, but it's still, the price action is still not very encouraging because silver was up 2% at some point, then gave it all back almost. So actually all of it. So it's still trading. They're both still trading a little bit heavy. I think mainly because the dollar is rallying and because yields are rising. But I think we can all agree that these factors are short-term factors for metals. So it makes sense that they're kind of hesitating to go higher, and we have to wait for CPI today. There's all these obstacles if you're long, that is.
Yeah.
So,
there's always a reason to not do something.
Yes. So at the moment,
actually, you can make that excuse every day and any day and every day.
Hello, Blake. I love you too, man. How you doing?
Hey, what's going on, man?
Well, Blake, it could be a red number or it could be a beige number, where it's not as intense.
Yeah. Well, I'm lucky. I got lucky, and I'm in the money on the trade again. I put my stop at the break-even level, and I'm going to run it through the CPI.
That is the best place to be, isn't it?
Yeah. No heat.
Well, I'm glad you brought up the CPI and Stelios. I'd love to get your thought on what you think precious metals are going to do here with the data that we're going to get today, because today's data, it's going to be a hot, whether it's above or below expectations, it's going to be a hot number, and we're going to get probably hot numbers for a while, and it's going to take a real big reversal of that inflation data to really move the needle in what Fed expectations are. And I guess market expectations of what they think the Fed is going to do. So with that being said, what do you think is going to happen with precious metals following, like, let's just say we have a, 8.3, 8.5% reading year over year in CPI. What do you think? Do you think that metals are going to get a tailwind as that because of that, or do you think the market's already factored it all in? Because a lot of people will speculate that it doesn't really matter because we all know that it's going to be hot data. So what do you think there?
Well, first of all, you have to. Are you in my DMs? You're basically saying exactly what I said to a friend of mine, literally 10 minutes ago.
No.
Friend of mine, really smart guy,
hiding in the closet in your office. Yes,
a friend of mine, really smart guy, asked me, "What do you think about CPI and what do you think happens to gold and silver on that?" And I said, "Look, I think we're going to have elevated inflation."
Wait, did he call you a smart guy?
No, I said he's a smart guy.
Oh, I thought you said no one would call you a smart guy.
No, I'm not smart.
Okay,
I said that we're going to have elevated levels. We still haven't seen the effect of Ukraine coming through. I said to him, if I have to guess, I would say slightly above expectation today. But let's not forget, we're expecting 0.5 percentage point higher than the last reading. So it's already a hurdle. But I think we're going to probably be overshooting the estimates. So what do I think metals are going to do on a good number? A good number, I mean a high inflation number. Well, perversely,
bad number.
Gold is an inflation hedge. So if we get huge inflation, it should be doing well. Perversely, in the short term, it never does. So if we see 8.5, 8.6, 8.7 year on year, I think they take a little dump. How big? I don't know, but theoretically this should be good for metals, but in the very, very short term, because we're going to see yields go higher, we're going to see the dollar go higher, that's going to be a force lower.
Okay, and let's point out kind of what happened yesterday, just because I think this is important. Stelios, is yesterday, you and I were doing the morning edge with the ForexAnalytix traders. So for those of you that don't know, we do an interview. We do a call like right after we're done here. Well, about 15 minutes after we're done with Dale's interview, we go into what we call the morning edge, and the morning edge is where we go through all these instruments and then some, kind of answering your questions. Yesterday was pretty slow, and we were kind of hungover from the Trader Summit event this weekend. So we just basically went over the majors and said, okay, we'll catch you guys at the daily roundup. But yesterday we talked about gold and the importance of the 1970 level, and gold hit the 1970 level, and literally I want to say 0.2 of a pip, and then reversed hard after the fact. We talked about it, and then we were down here, and then we hit that 1970. We reversed hard, and we're coming back up to it, which, in my opinion, since this is previous support, current resistance, and we're coming back up to it again, that's going to tell you the magnitude of that 1970 level in gold. So if you guys are trading precious metals, I think that's the number you need to be watching. If gold breaks 1970, I think it is a trapdoor move, personally, that'll take us right to 2000 shortly thereafter. You have any thoughts there?
I agree 100%. And I think, even though I think that inflation readings are going to be coming strong, I think in the next few months, I am going to be pretty much on before every single one of them. I'm going to be along a little bit of precious metals. Now, if I can manage to be long with a nice little buffer like today, that would be great. But I want to be long because at some point it's going to start disappointing. And when that happens, I think metals are going to fly. But in terms of the technical point, as you talked about gold, I agree 100%.
Okay, all right, and Dale, you'd mentioned yields, and you talked about Carter Worth on CNBC, and you mentioned he was using a logarithmic scale, and found the resistance at 280 something on the 10-year. One of the things in our chat room just about an hour ago, I posted the 10-year yield. And I posted this chart. We have an ascending wedge going into really the key 261% extension of the last move lower. So if you guys
4 hour,
This is a 4 hour, or you can look at it on a daily. It doesn't really matter. But the 4 hour, the reason why I have the 4 hour and the hourly charts is just because we have an ascending wedge going into that number. So if you look at the high in March of 2021, the lows in July of 2021, the 261%. That's an extension of the golden Fibonacci ratio. So if you guys know me at all, you know there's only two real, well, there's three extensions I really care about: the 127% extension, the 161% extension, which is usually the line in the sand for me. And you can see even on yields, you can see what happened for like a good 2 weeks. We just consolidated right at the 161% extension. Then boom, we hit the 261% extension overnight, or the last couple of days, if you will, and then we have reversed pretty hard coming out of that wedge ahead of the data. So my two cents are, no matter what the data is today, yields are coming down. That's my opinion. So based on what I'm seeing here, so you can formulate what you think that's going to do in the markets based on what you're trading. My opinion is it doesn't matter what the data is, yields are going to come down. So in other words, expectations of, even if it's a hot print, people are going to expect that moving forward, this is going to be the peak CPI data that we get, at least near term. And what that will possibly mean is a reversal in the dollar. And you guys saw the jawboning coming in from the BOJ yesterday, and I have to tell you what, this dollar yen, in my opinion, we hit a new high, very divergent relative strength, very overbought. And you guys know that, above 125, I would not be very comfortable being on the long side of this at the moment. But with yields coming down, if they do come down, let's just say I'm right, or for argument's sake, let's just say I'm right. If yields do come down, the dollar yen's got some downside. Now, I'm not looking at the dollar yen at trading back at 110. I'm looking at the dollar yen pulling back maybe to 121, maybe 122, somewhere down in this neighborhood. But if yields come down, that is going to be my preferred trade of choice. That and obviously I would be looking for the euro to recover ahead of CPI. The only big deal that we have with the euro is obviously we got ECB later on this week. So I just wanted to say that. How about you guys? What are your thoughts here? Going into this data, is it going to be a hot print, and does it matter? What do you think, Steve? I heard your voice, and good morning.
Good morning. What do I think? It is going to be hot data. Yes. Okay. You gave an outlook for the short term.
I'm sorry. Hot. Yeah. Can you explain hot? Hot above expectations, or it's just generally speaking, we're going to be above 8%. So of course it's hot, but is it going to be above?
If I remember right, during the past year, we've had just a single CPI print that wasn't above what was expected. I have no reason to believe that that's not going to be another one of those. Right now, Can I guess what's going to happen? No. If I had to, though, I would say that the chances of seeing once again an underestimation of the CPI is a very, very good likelihood. It was more than obvious almost a year ago that the situation is slowly but obviously getting out of hand, out of control, and it's now completely out of control. The Fed and the rest of the central banks are amazingly behind the curve. I mean, they can't see the curve anymore. They're so far behind. Now, technically speaking, I don't disagree with your assessment that there is a good chance that one way or another the market is going to manage to pull back from here a little bit in the yields. But as you have conviction about what might happen in the very short term, I have a conviction of what will happen medium to long term. And my conviction is that yields are headed much higher than they currently are. Yes, short term, they might pull back, indeed. But in my opinion, we're nowhere near some kind of a high.
No, I agree with. Actually, you got to if you're trading. Like if you're trading the bond market, let's just say you're trading, actual, 30-year bonds or 10-year notes or whatever it is, you guys should know that we are at major levels of support. I mean, this is the 10-year, and you can see the support that comes in from 2013, 2018 to where we're at right now, and this is very important here. And then, that was the 30-year. I'm sorry. Here's the 10-year. And then, the 10-year, very similar situation, but, we're actually breaching through some, pretty key levels of support. So I agree with you. I think yields are going a lot higher than where they're currently at right now. But near term, let's just talk over this week going into an Easter weekend, big holiday weekend. Friday is going to be, obviously everybody's going to be off.
And Blake, it's not just U.S. Treasuries, right? The Bund, for example, is trading at 7-year lows almost, right?
Yeah, look at this. If you guys want to see a chart, there you go.
Yeah.
There's a good chart there. Yeah. That's and you know who nailed that? The smartest guy in the room.
Stelios.
Me. I'm joking. It was Stelios. Yeah, he nailed it. Yeah, Stel. He was like Mr. Bund Bear. Over here. So, he's been looking for lower boons for a while. So what do you think now, Stel?
I still think we have a little bit to go. One of the reasons being that I think that the ECB is going to change their wording at some point, this week or next meeting. And the general trend in yield is still higher globally, inflation is still higher globally. I just don't see what's going to drive them back, especially given where they are. 10-year Bund is what, 0.75 now, or whatever it is. It came from -0.5% to 0.75. Big deal. It is a move, but still, in the grand scheme of things, it's nothing.
Yeah, it's nothing.
I think they will probably continue. Obviously, if we have some kind of huge crisis of some sort, I can't predict that, but I think if things continue as they are, inflation is going to be higher, yields are going to be rising.
And you can see, but I want to show you not only boons,
falling
but
wedge.
Also the 10-year yields are also showing you that the big reversal setting up. And the ascending and descending wedges are my favorite reversal patterns. Just so you guys know, they tend to produce the biggest bounces. And when you're in a bear market, like in boons here, some of the most aggressive moves are going to be this reversal, the ones that you see here. They're aggressive, they're tradable, doesn't mean that they're trend changing either. And that's the same when you're
bear markets tend to have the most vicious type of rallies, right?
Right. So if you look at the yields, I mean, 10-year yield might drop to 2.3%, and everybody's like, oh man, the bottom's in bonds, and we're nowhere near the bottom.
Nowhere.
You see the bond market give us some big reversal like this in the 10-year, and then the next move looks like this, right? And so, but these moves, these reversals are very, very, you said it, Steve, vicious. So who we haven't heard from? Ryan, we're going to get data today. It's going to be, it's going to be super duper hot, like, Spice Girls hot, or is it going to be like, Britney Spears hot? Wait, no, Britney Spears is hot. Let's see. Is it going to be, I don't know. I can't, I should.
English summer hot.
English summer hot? Is that what you just said?
Why not?
Okay. So what kind of hotness are we getting today?
Well, for me right now,
Susan Boyle.
We're not. It's not about what I think the number's going to be. It's what the market is thinking right now. Where is the market sat, and where is the bigger price risk? And right now, the bigger price risk is that inflation comes in soft, because the market's set for 50 pip hikes. It's set for QT. The Fed's on its way. Higher inflation. There's not much more to squeeze out the Fed expectations on the hawkish side. So the big price risk is if it's soft, and if it comes in. Round about 7%, below 8%, even down to the low 7s. If the core comes in, below what it was last month, that's going to cause a bit of a change around in those expectations.
How would that happen? How would that happen? Do you think that's even possible?
Yes and no. It's possible because we're in a volatile situation with inflation. 2 years ago, if inflation moved 2 pips, that was a big move. Now, if it moves 5 pips, everyone goes meh. You know, that's the volatility that's involved. So if you want a hot number, it's got to be way above 8.5%, and that's a 5-point jump over last month. So you're talking, 6, 7, 8%, 8 pip jump. That's a bigger move than if it comes in 8.4 to even 7.9. The market's going to be okay. Things are as they are. That's inflation. So it's really got to really bust the upside. But I still don't think there's much room for the dollar and yields if it does bust the upside, because the market is leaning that way already.
Ryan, so, I agree with you that the biggest surprise for the market would be a soft inflation print, which I think the chances of seeing one are low, right? Yeah. Really low. Not impossible. Nothing is impossible, but really low. But we still need to remember the big picture and put things in context. The expectations for today's number is a 1.1%. That used to be, at some point, a yearly number. Now we're talking about a monthly increase in prices of 1.1%. And while prices are increasing by more than 1% per month, the Fed is currently at 25 basis points per year. So going back to what Blake in essence said, let's assume that we get, God make it, a soft print of 8% inflation, right, instead of 8.3 that's expected. I don't think we're going to see that, but let's assume we do that. The reality will still remain that we're so far behind the curve that, normally speaking, that should still do nothing about expectations that the Fed should keep hiking 50 basis points for the foreseeable future.
Oh no, Steve, I agree 100%. You look at it from a trading standpoint and a risk reward standpoint.
No, I'm with you. The biggest surprise will be soft.
Or selling the dollar on a bad print. Where's your biggest risk reward just for today, this minute? It's not going to change. It's not going to change anything to the Fed over the next months. But for today,
depends, because I still think, if you ask me, if you ask me what are the chances of seeing a soft number, I will tell you that in my mind they are equivalent to the chances of seeing a blowout number. Mm-hmm. Right? I mean, 9%.
I'd like a blowout number. Because I think there's a good positioning potential for euro dollar going into the ECB.
Yeah. So you want a blowout number?
No, I'm saying that I think there is a chance for a blowout number, really.
Okay. Yeah, I'd like a blowout. If I see euro dollar down to 108, I'm looking to buy some 108.50 calls, 109 calls to run into the ECB.
All right.
I don't disagree with that, Ryan.
Hey, wait, guys. So we got about 2.5 minutes to go until the data comes out. Real quick, we have the RBNZ tonight. Well, tomorrow morning if you're in New Zealand, but tonight here in the U.S. And it's going to be way past the time I go to bed, because I as much as I'd love to stay awake for it, I just can't do it now that we did the time change. Would you guys have any expectations there? I know they're expected to raise rates. I think half a basis point, if I'm not mistaken. Let me double check that. No, a quarter, but they could go a half, and that's going to be.
I think some are looking for a half. Yeah.
Huh?
I think some are looking for a half.
Yeah, some are, and that's why we're holding the 68-cent level. And we that's channel support. Greg called the false breakout. He was here last Monday.
Yesterday.
It was last Monday, right, Dale? And he said, hey, reversal here from 70 cents. And I'm like, we could drop to 68. We got there, and now we're holding it. So, I mean, if they only come in a quarter, there's a chance that we could actually break that.
The RBNZ are very good on the buy rumor, sell fact. Trade.
Yeah. I don't like going to sleep post RBNZ, going to sleep in a profitable position, thinking that it's going to be more profitable when I get up, because it more times than not is reversed by the time I wake up. It's almost a given. All right, we're getting close to the data. I'm going to pull up the dollar yen. This is probably going to be one of the more sensitive currencies here. I'm going to pull up not only just the dollar yen. I'm going to pull up the S&P as well, just to see if there's any reaction in stocks. And then if you guys don't mind, if you shoot, I did not mean to do that. All right, that's fine. We'll just keep it on here. That's a 15-minute chart with the S&P 15-minute chart with the dollar yen. And let me pull up the data, and you guys scream at me if we have any, and we're going to data flash. Data flash is what we use here with ForexAnalytix. If you have your subscription there, just pull that up. Data should be coming out right here.
10 seconds.
All right, let's see if we can get some action. Let's go action. Woo, that data's got to be weak. What?
There we go.
On a month-to-month, yearly CPI. Good,
There we
but
go. Slightly higher, yeah.
Yeah, slightly higher, but the month-over-month, woo-wee. Look at that. Well, and I bet yields are coming down, right? That's going to be my assumption here, following the data. It was already leading us that way anyway. Yeah, yields are breaking down. So yeah, dollar weakness coming in. Stocks are ripping. Stocks are saying, thank you very much. Thank you, ma'am. Wham, bam. Thank you, ma'am. We're going to move higher there. I'm actually going to have to close out my DAX pattern in place. So you guys excuse me. And do you guys have anything? Can you mention stuff while I do this? Steve, Stelios, Ryan, anything about ForexAnalytix trading funding program while I do this, please? Thank you very much.
Go ahead, Ryan. You warmed up on Sunday.
Yeah, so I just put these numbers.
Ryan's trying to trade too, so go ahead.
The funding program. Obviously, we've got that up and running. It's a great opportunity for traders to really now discipline the risk side of their trading and use leverage to increase what they're doing. If you've got a small account, it's a low risk way to leverage up your trading funds. For the sake of $250, $500 for an account. That's your only risk. There's no downside if the account, something happens to the account, a black swan event, and the account goes negative, you're not going to be liable for that money. Your risk is what you pay for the assessment, and you've got as long as you like to pass the assessment, make that 10%, which is a huge plus over all these other types.
Sorry to interrupt. There's only one clause, which is you have to make a trade every 45 days. So that's
an activity clause. Yeah.
All
right. Well, thanks guys for mentioning that. I know, the Trader Summit the Trader Funding Program has been it's been a great option for a lot of traders, right? I mean, why put your own money at risk? You can, if you think you're a good trader and you want to access more money, this is a great option for you. So make sure you learn a little bit about it. You can find out about it on the ForexAnalytix website. Guys, we need to pass it over to Dale because it is interview time. I think, who do you got, Dale, today?
Miyad Kazravi.
Oh, I'm excited to hear Miyad. Is he here?
Yeah.
Oh, cool. All right.
Well, hey.
Yeah, you guys have a great interview. Miyad, welcome to the ForexAnalytix community, and I'll let you guys go. Thanks, Ryan, Steve, Stelios.
Thank you.
I'll see the ForexAnalytix crew, all you ForexAnalytix traders. I'll see you in about 45 minutes on the Morning Edge.
Thank you, team. Nice call on the yield move today, Blake.
Thanks,
we agreed. Man. Anyway, very nice. And Miyad, welcome back to F.A.C.E.
Good morning, everybody.
How are you, buddy?
I'm great.
Big move in yields. There is gravity in yields. We're seeing it today. Are you going to share your screen?
Well, indeed, yes. Thanks for having me. Hi, Blake.
Great to have you back.
Hi, Ryan.
Hi, Ed. How you doing? All right?
I'm good. I'm all right.
Welcome.
Thank you. Well,
it's that little green box, Miyad. Oh, there you go.
Yeah.
Okay.
You can see my screen?
Yeah, got it.
Dynamite. Big move in the deals. I think everybody, including myself, was thinking, look, if this read is not going to disappoint, when is this inflation going to stop? So good, we've got to see a bit of a disappointment in CPI, at least if not for our own pockets. We see a bit of dollar reversal here. That's exactly what you like to see. You want to see a little bit of the hawkishness coming off. We had US 10-year yield coming down a little bit. Ahead of it, we had supply concession, which is usually a dynamic you tend to see ahead of the 10-year auction, where marketers tend to drive up the yield, so you get better prices for the bonds once they start getting the bidding war on.
Okay.
So I don't really take the yield move today too much into consideration. We like to see how it evolves throughout the week, specifically given it's a shorter week, but certainly looking like very, very toppy already.
I went to your Twitter stream, and your long-term idea, I call it maybe your highest conviction trade, was long odds again, and that's been a terrific ride. Wondering if with what's going on here, if you think that any dip in Aussie yen should be bought still, and your take on the yen. I know it's a big pair to you because last time you were on, you're a little bearish. U.S. dollar yen. You said instead of playing the short side of equities, the way to go was shorting yen crosses. I think it was back in January or February, Miad. So yeah. Where are you on the yen now? I saw you're working the long side. What a monster move it's been. Could we be close to completing something there, short term at least?
Very interesting brought up. So yeah, last time I saw it sort of topping out. Bad decision to short yen, obviously, very bad. This is specifically what happened with oil started ripping. Had to revise some of the trades, and in the middle of it, ended up losing a lot of the upside that I wanted to catch up, which was one of the downsides for me in February. Probably didn't end up with much profit as I like to. Going ahead with yen, what you have is a Bank of Japan doing yield curve control, and when they start doing yield curve control, some really interesting dynamic happens. Specifically, when I first time did it in September 2016, we saw some really interesting moves in yen. Basically, all yen pairs started rallying, specifically USDJPY, massive rally. I'm going to quickly pull up that chart, actually, since we're talking about it. It's good to bring up the visuals as well.
Yeah, and you know what, Miad? Everyone is wrong. It's okay to be wrong. It's not okay to stay wrong. And, even sometimes I have to be the wrong way in the market just to know, like, I'm fading the trend. I'm making the tough money. And then the easy money's coming on the other side of the market. Sometimes you have to be the wrong way to know to get the right way.
Yeah, but you certainly can't be neutral on a moving train, not something like that. So you really wanted to make a directional call on this. There wasn't one of those markets where I had to sit it out. It was one of those where I had to get engaged. If you're wrong, you flip it. And that tended to be one of those. Going back to 2016, September, that's when I started the yield curve control actively. We saw an initial dip, but then after the Trump election, that rip came. And funny enough, in the recession in 2020, market dipped back to when I started the yield curve control and quickly climbed out of it, better part of 1,000 pips or so. So right now we're in an environment where they're doing this yield curve control again. They are controlling the 10-year yield on the Japanese yen for 25 basis points, and they're quite effective at that. Basically, every time market starts pushing there, the Bank of Japan will buy unlimited amounts of bonds, flushing the market and the treasury with money to keep the yields from rising. If yields rise, the credit's going to be much more expensive. Government has to borrow much more expensive, and that will ripple down the economy, and that could possibly choke off economic growth in Japan. So
what about the flip side? What about the flip side? Okay, so the yield curve control is accomplishing their monetary goals, but not much is grown in Japan or drilled in Japan. Mm-hmm. And they're an importing nation. So a weak currency, I would think, would only exacerbate what the population is paying for everything. Is that happening? And, I saw the DSI on the yen, I think at 8 today. So what about the flip side of having a weak currency and having to buy everything from outside your shores?
Yeah, so when I look at what Bank of Japan does, I don't look at it necessarily what it does for the Japanese economy, because it doesn't do it quite a lot. Same thing when the Fed does QE or when the ECB does QE. It doesn't really help the normal people. It really helps the investment environment. There's some that's very common, but you don't really see in the headlines, that QE leaks. So the QE from the Bank of Japan is leaking over to the US stocks. It's leaking over to the DAX is leaking over to peripherals in European bond markets. So as long as Bank of Japan keeps chugging along that, flooding the market, you're going to see these leakages in these different markets. Once they stop that, that's when you see actually yen accelerate aggressively, because all that money will get pulled out of those markets, or it will stop flowing. So I think the bigger impact here is global rather than for Japanese. For Japanese people who live in Japan, if that makes sense.
They must not have elections very close then.
Yeah.
Okay, then it'll become economic too. So, you know, I mean, here in the States and everywhere, it's the biggest issue. It's become political. Inflation. We have to defeat inflation like the 70s when you were just a little guy.
I wasn't. I was a twinkle in Dad's eye. No, seems like
see how little you were.
You had to go that way.
You needed a microscope to see it. So that's great, Mia. So okay, anything you're thinking about ECB wise?
Yes, I am bullish ahead of ECB. I'm bullish mostly Euro GBP. I've added a small position Euro USD long just after I saw that CPI just now.
Yeah,
I am looking for ECB to flip, to start committing to a rate hike, do something here. Last time I seen a rate hike was when there was another French at the head. That was back then Trichet, who was the only guy I ever seen raise at the ECB. And after we had Draghi, and he had different types of policies. So what I would like to see, I like ECB to show a little bit of, step things up. We're seeing all how the economy is evolving. That's the sort of interest rate they're running does not reflect that. So I'm looking for them to start raising rates, start committing to some sort of a path. And I'd like to see a little bit more oomph on Euro USD. When I look at the yield spread charts on Euro USD, it's not as attractive. So when I look at the yield spread charts, that's telling me maybe there's a little bit more downside left in Euro USD. And that's why I'm keeping my position in light at the moment, because I feel like the yield spread chart tends to be a leading indicator for me for where FX is moving. So when I look at that, I see a bit of a bounce, but the original dip was quite aggressive. So maybe we can catch a little bit more downside on Euro USD. For me, I'm happy to go in with a long and keeping my stops quite tight now, running just around these lows here. If it breaks away, it's absolutely fine. Then we'll re-engage with it. And I need to rethink that. On another trade I'm running right now is Euro GBP long, because I think that the elections are over, French elections are over, similar to 2017. I'm expecting some sort of an upside, but my initial target being around the 0.84 level. Again, yield spreads aggressively in favor of this moving higher. It's just about getting the timing right with this trade. Another trade I'm running.
Okay.
Yeah.
Go ahead, buddy. Go ahead.
Right. I'm just going to wrap up a couple of trades and we can go into the details. I've got a DAX short running. As soon as I heard about the news that Germany is thinking about possibly cutting energy supplies and gas and all of that from Russia, had a good initial 400 up pip drive, so I had to take some money. I was hoping I'm going to get lower levels. I'm starting to tighten my stop on that trade because there's some notorious going on about April, where the first couple of weeks you see these incredibly lovely moves. Everything makes sense. Halfway through April, everything falls apart. It either goes into a chop or all the moves start getting reversed and they find their footing again back in May. That's a pattern I tend to see over the years. And when I went over my own trading, I realized that happened quite a lot. So I'm a bit cautious moving deeper into April.
April's a strong seasonal month. Is that what you're saying?
Yeah, it starts off really strong, Dale, and then you just get rocked. If you're not quick enough, you will get hurt. So that's okay. So I'm mindful of that. I don't want to overcommit to a trade right now when I'm close to the middle of April. The last trade I'm on, which I actually just got stopped out, was ESD CAD. So we went long at 24.87, and I just got stopped at 26.09 as dollar starts dumping away on the back of that CPI trade. A lot of interesting things running, USDJPY as well. We're still sitting with this one on the long side. A lot of interesting things happening right now in terms of, is this inflation peaking? Where are we headed here? So I think we need some chewing through data still, but there's certainly a lot of good trades kicking about. But I think you had a question or so, and I'd like to get to that.
Okay. I'm wondering, where do you come down on that? We've had oil come down, big, huge, I don't know, looks like a distribution pattern to me, between the mid 90s and 130. bouncing off support here. Copper looks like it's rolling over to me. The miners look had a great run, but they're all diverging now. Wondering if that scenario could be something that will become the new narrative from, sell all bonds and just be long commodities and commodity currencies. And we're in a super cycle bull market in commodities. And I haven't seen people this bullish, and for good reason, commodities, but maybe it's a little too crowded and we need a breather in both. The bearishness out of the interest rate scenario that we've had, and take some of the bullishness out of the commodity markets. What do you think?
With that in mind, exactly what you just said, with that in mind, I've approached AUDJPY, funny enough, last week, and I thought, look, AUDJPY, perfect reflection of inflation expectation, perfect reflection of this whole bull run.
Yeah,
I think it should stop. So I started shorting it, and I'm seeing this is not moving lower. And you take time into consideration, you take yields into consideration, and you think maybe I'm wrong here. So I had to get out of that trade pretty quickly, flip it long again, as F.A.C.E seems to be either leading or lagging this whole commodity thing, because I don't see it has peaked yet. Yeah, I see copper coming back down, you're right. Oil definitely reared back. But we see that there's some other issues still happening there down the line with other commodity producing countries that are not quite resolved yet. We just recently saw Sri Lanka defaulted on their debt, and that's back all on the back of food price inflation. So all of these smaller nations, they are, if they start having this chain reaction of defaults because the inflation is hurting them too much, it's going to start nipping away at us as well. So I'll be very cautious to call this commodity whole thing a top just yet. I feel like if I had to call it a top, it was really great when when oil was trading 125 on WTI. Yeah. I think that was a great level to start looking for shorts, because we saw a lot of money come off of that. But now I am not too sure, because basically this whole rally was on the back of the Ukraine-Russian crisis. We reabsorbed that, and now we are trying to find the equilibrium. Where can we trade from here? From what I see from data coming out, it's difficult to examine this lower. Sorry, fire away.
Yeah, that's all right. So it's interesting news. I didn't know about that Indonesian default, but that comes in light of some type of technical default by Russia on part of their debt because they wanted to pay in rubles. Will the complete default by Russia ripple through the markets, or is it just something that we're whistling past the graveyard, not being that concerned about it, since it was our policy in the U.S. And the World Bank and the IMF is the U.S. So our policies are driving Russia into a potential default. Will it have any impact on, say, Europe has more exposure to Russia, the banking system? No one's talking about it. I know you're a pro, you look at everything. Are you thinking about that at all?
There's some idiosyncratic risk to do with Russia. The good thing that they still have some sort of a buffer of cash lying about, and they're also still selling oil at a steep discount, but they're still getting cash into the country. One of the biggest pricing powers, or one of the biggest things that they needed, that the UK took away from them, was basically being able to sell their government bonds in the open market. So that's basically free credit for them in this new society of monetary policy. As long as you can sell your bonds, you got continuous cash flow. That was one of the biggest thing that is probably going to hurt Russia down the line. In one way, you could say good that the UK did it quite early, because if they waited a bit longer, market would have driven the yield to the absolute limit, and that would have hurt Russia more. But the problem Russia has got, they can't get funding from normal markets, and that is really painful. They can't transact with other countries. That's really painful. They have one or two investment firms. They have money stuck in the billions. They have a couple of companies, oil companies, they have to write off, again, in the billions. Yeah, it will certainly hurt the economy down the line. But you haven't seen Russia crack yet. This is not a Russia that's cracking. This is a Russia saying, look, we're not defaulting on our debt. We're just playing a bit about with a couple of things. But as you can, as the time goes by, they will grind them down.
How do you explain the U-turn in the ruble? It's recaptured all of its pre-invasion losses.
because nobody's trading. Can you trade ruble right now on your desk? I can't. They give me some ridiculous quotes. I've got 2 brokers. The other broker doesn't allow me to trade it. The reason it will rebound is because you can't buy it or sell it.
That's what they're posting. They're just posting a trade.
So they're making it up.
That's what Ryan told me. So I just want to, Ryan told me that, if Ryan, I thought I'd ask another smart guy because it just, is crazy. I even asked Adam Button. He said he couldn't explain it either. So it's all just whatever trade, whatever they're saying it's worth is what's showing up on the charts.
Unfortunately, right? It's not really reflecting fundamentals right now. Initial rebound you see after these aggressive moves, but we're looking at it right now. These sanctions aren't coming off; they're doubling up, and it's going to be a long-term grind on the economy. That's what they're trying to do now. It's an economic war. We're not fighting with guns with them right now. We're going to fight with them, capitalism, and that's it's going to wear them out eventually. Not to a point where they're going to change policy. That never happens with a communistic society or country. They're not going to say, okay, please take sanctions away. We're gonna coerce to what you want us. That's very unlikely to happen. What they will continue doing what they're doing, but it's just going to be much more difficult, much more costly, and eventually their technology imports going to become less and less, and it's just going to grind the country to a much slower advancement than it is now. That's what it's going to do.
Okay, and I'd like to ask you, just say, for example, I know this is your old position is, I'm guessing, is mainly, just a trade, like, just another trade. Can you make a fundamental case for this rally in the dollar to be completing and for there to be a big correction or a bear market in the dollar? What would the fundies be to drive something like that, Miat?
For me, one of the key drivers now for dollar going up, news headline will let you believe it's market pricing in Fed rate hikes, which to some extent it's right. But really realistic, what happens is when Fed starts raising rates and starting doing QE, you're going to see liquidity tightening in the market. And what do we all need to transact? We need dollars. What do you need to buy oil? You need dollars. All the other commodities, you need dollars. For everything you do in life, you need dollars. So if that liquidity tightens, getting your hands on dollars is going to get more expensive, and the need for dollars is going to be more. And that really what drove up dollar over better part of this year, and so on and so forth. So the only thing that can stop that is when the Fed starts opening up the liquidity tap again. We need the Fed to either stop the QT very quickly. So it will be starting, I believe, in May. And once that happens, I'll be very interested to see if really the dollar stays up here. I would expect it to move higher. It makes sense only. But
you have upside targets
once the Fed steps back, excuse me?
You have upside targets in the dollar?
Not just yet. I really want to see how May evolves. I've learned the hard way. Don't make any predictions in April because they never work out. They're going to wait for May to come online, and I see what market reaction is to QT. In the past, I've seen QT or any type of tightening in USD liquidity, always USD positive, always, like hands down. So I'm really finding it hard to expect anything different this time.
Okay.
So the only thing that's going to change dollar's direction around is if you see
the Fed reverse again.
Yeah, you want some liquidity back in the market, and that's when you see your Bitcoin moving up as well.
Okay. So great to catch up with you. How can people follow you, or if you have one more idea you want to share with us? I have your Twitter handle. You could follow me on Twitter at ZFX Trading, and he trades from Scotland. Are you guys going to join NATO, or you're safer without NATO?
I think that question's answered itself since February.
Oh, did you guys join NATO?
No, we haven't. Well, Scotland is part of the UK, and UK is part of the NATO, so we're sort of part of it now. Yeah, I think if Scotland goes for an independence campaign again, and for whatever reason we vote to leave, I think there will be a security. There would be a security trial. Let's say how this all works out. Maybe the next day the referendum goes for yes. Before you know, you see subs outside Scotland waiting to get overtaken. But I think everybody learned the hard way that becoming independent is not just straightforward. It's not about just dealing with pounds. It's also dealing with your security outside. It's also dealing with our biggest trading partner down south being England. There's loads to consider here to become independent. And for the time being, the only thing that's positive becoming independent is having high oil prices, which never stick. So it's a bit of an if right now.
Well, do you think you have a guardian angel that took you out of the Middle East and landed you in one of the most beautiful, safest places on the globe in Scotland?
Maybe it has, maybe it hasn't. Yeah, but mind you, I was in Germany, moved down to Iran, and then I met my wife. She's Scottish. That's why I moved up here. And to be honest, I wish I could invite you over if you can come. The scenery is just takes your breath away. You know, it's something different.
I've seen pictures, and you know, I really appreciate your looks and you coming here today, Miad, to share your work. So this is where you could find Miad right here.
That's the website if you'd like to be in touch, if you'd like to engage on a macro level with me, or like to see what I trade. Really happy and love to engage with other traders. Dale, again, thanks for having me. Ryan, great to catch up. And thanks everybody from ForexAnalytix.
Thank you, my trading warrior brother. Good hunting this spring.
Likewise. Thank you.
I'm rooting for you because I'd love to see a dollar break here. Thank you, Miad.
Cheers. Bye, everybody. Bye.
Adios. Miad Kazravi, everyone. And the team is going to be on the morning edge in 20 minutes to update you on this recent move after the CPI. See what levels maybe Blake is changing on the bias chart, and be part of, you know, you got to be part of this community. If you're here on F.A.C.E every day, you're getting the tip of the iceberg. My opinion is the most valuable part, and the research is great to be able to just, you know, oh, what's Greg thinking? What's Andre thinking? What's Blake doing here? You know, to have that at your fingertips, or if you're out and about, to get the notices pushed to you on your phone or wherever you're at, so you could, you know, go on with your life, and you know that if something important's happening, you're gonna get a push alert about it. I'm a big believer in the communities that have only gotten better because of the expansion. With Ryan coming in, you know, pick your poison in the number of chat rooms that are there, and this is a tough business, and you know, you can't learn experience. It takes time, but there's so many experienced traders besides the team in there, you know. So just if it was a team, but there are people that are traders. They're not doing this as an avocation, it's their vocation. Become part of the community somewhere. I just happen to believe that Blake and the team have developed the best community covering FX for sure, and everything else. So that's the end of my lecture. Remember, most of all, don't just count your pips, count your blessings. Be back tomorrow. See who the guest is tomorrow. I had Miad. Oh, Big Cheds. Okay, so he's really a crypto trader. He's got a couple 100,000 followers. We'll see what Cheds is thinking. Tomorrow, something else Blake called. He was, if you recall, he was talking about, he was concerned about the structure of Bitcoin before it got clipped yesterday. You're welcome, Monica, Jace, Galaxy, all you guys. Good hunting. And really, try and pass the assessment. It's going to be, I don't think it's going to be a slow summer in the markets this year. So get ready. Adios, everyone. You're welcome, Jerry.